All right, welcome back. If you're new here, I'll just give you a quick overview of what this channel's about. And part of this series, I'm going to try and do a couple different things. If you saw some of my other videos, it's really focused on what's the progress to my journey in terms of capital preservation, starting a business after my recent layoff, trying to grow my account while I'm also having to draw from it, the whole nine yards. What I'm going to do is give an update on that every single Friday. So I'll make the video on Thursday or Friday or a combination of both. Maybe even sometimes put it out Saturday. I'm a busy dad like everybody else. But again, the intention is to snap the line every close of business or close of the market on Thursday to see how our account is performing week to week. But in between that, I just want to put out some videos that hopefully help somebody else with some things I've learned along the way. So as part of today, what we're going to cover are just, in my opinion, some of the basics, just the basics of investing. And I understand that I didn't even cover that. My first videos talked about trading options and stocks and all this crazy stuff. But before I even just went straight into the basics. So let this be the video of just, if you don't know anything at all, hopefully this helps. So we're going to cover a couple things. Getting started. What does that even mean? Do not try to beat the market, especially while you're new. And we can use this to just learn things before we leap into some of these more advanced strategies. And again, as a reminder, this is not financial advice. These are just my opinion. So the first thing is, you're going to need a brokerage account. And you're going to hear a lot about all these different things about what a brokerage account is and all that stuff. But just in summary, it's very simple. It's just a product that helps you trade securities, i.e. stocks, buy mutual funds or anything like that. And there's going to be a lot of different options out there. Some of the bigger, well-known ones like Vanguard, Charles Schwab, Fidelity, some of the others like Robinhood, Mono. There's a bunch of different options. But my personal preference is Schwab. So that's what I'm going to talk about. It's very, very easy to use. It has a very simple interface and it has very advanced capabilities and very simple capabilities. It's easy to move money in and out of. It gives you checking account options. It gives you basically every single product you could think of in terms of how to get started investing in a very, very easy way. And also, they own some pretty powerful trading capabilities if you ever get into that. If you want to learn all the ins and outs of what a brokerage account is and some of the best ones, some of the worst ones, or which just may be the right fit for you, there's a link down there. I'll also put this below so you can check it out. But that's going to give you a lot more information. But just in summary, you're going to have to start somewhere and you're going to have to open an account if you do not already have one. I do have some stuff in Robinhood, but again, that's crypto, and that's not the point of today's video. If I can leave you with anything after this slide, it's just you got to start. You have to start somewhere, and the best way to start is just go open an account. It's free, it's fast, it's easy, it's very quick to add a bank account, but you just got to start. You just got to open your first account. So we're going to use Schwab. So you're going to see me using Schwab a lot. I personally like Schwab. You've already seen this. I told you I'm going to be very transparent about this account that I'm attempting to grow. But Schwab just comes with a lot of different capabilities. It has basically a product for just about anything you want. It's very easy to transfer money back and forth between your bank account. It's very easy to trade. They have all the different, they have great research capabilities. You can do significant amounts of research on any stock, any ETF, any mutual fund, or anything like that. And again, I'm not sponsored by anybody and I don't intend to be, but just I've used a couple of these different brokerage accounts. I have one at Fidelity because of my company stock. I have a Robinhood account, but that's not the purpose of today's video. That's more of crypto stuff that we'll get into at another time. And I also have a Vanguard account. I manage one of my sister's money through the Vanguard. So it's all just personal preference. And for me, my personal preference is Schwab. But if I can leave you with just one thing, it's just start. So now let's go on to another what I believe is a fundamental pillar is do not try to beat the market, especially in the beginning. You're going to hear me often say I'm trying to beat the market by trading options and all that good stuff. With all that being said, I can promise you that the majority of my entire 401k, my wife's 401k, about half of the money that you see that I'll be managing throughout this journey is actually in these accounts that I'm going to talk about. And these are just basic index funds. An index fund is just accumulation of multiple stocks across the market. There's plenty of different type of index funds, but just in general, the S&P is probably the most well-known index fund, and it's the S&P 500. It's just a culmination of the biggest 500 stocks traded in the US market. If you did nothing but just put your money in an S&P 500 index, the market will make you rich if you let it. You don't need any experience to get great returns over time. And that's illustrated in this data point that I pulled directly from ChatGPT. I just asked ChatGPT, and this is going to be directionally correct. This could be offered, plus or minus a couple points, but a reasonable return for the last 30 years for the S&P 500 has been around 9 to 10%. So that's pretty powerful. And again, adjusted for inflation, that's still 6 to 7%. So if you don't do anything other than just dollar cost average, which just means put a very consistent amount over a consistent period of time into the market, you're going to get gains. Sometimes, some years, maybe multiple years, it's going to be down. But if you're putting money in when it's down, you're essentially buying low. And as the market starts to recover and you continue to be consistent, you're buying on the way up, you're buying on the way down, you're buying at the bottom, you're buying on the way up, and you're buying at the top. And you just keep with that cycle as the market goes on. And it gets even easier than that. Schwab actually has an index fund to do just this. It's similar to the S&P 500, but it tracks all the US stocks on the market. It's basically their total stock market index. And as you can see, over the past 10 years, it's averaged a little over 12% in returns, which is very similar to the Dow Jones US total stock market index. That's what they built this off of. It's basically the same thing. So when I say you don't need to try to beat the market, 12% returns are phenomenal, and I'll show you what that looks like coming up soon. But just in general, if you don't do anything other than just dollar cost average into this specific index fund, it will grow over time. And that's really it on this. That's what I wanted to try and illustrate, is that you don't need to be an expert at any of this stuff to make really good money in the market. You just have to start. You have to open an account. And you have to be consistent with some amounts of money, whether it's 20 bucks, 50 bucks, 100 bucks, whether that's over a month, over a week, every 2 weeks, once a quarter, although that's a little far out. Dollar cost averaging, at a minimum, you want to do it on a monthly basis. Ideally, if you can do it every 2 weeks, that's great. If you can do it every week, even better. But just in general, consistency over a long period of time in an index fund that tracks the entire market, it's going to grow for you. And let me show you what that can look like. I pulled this directly from ChatGPT. And again, this is not going to be perfect, but it's directionally correct. If you just put $100 a month in that index fund that we just looked at, or one similar that's getting an average over the course of 30 years of a 12% return, which you saw is possible, you're looking at a potential of $305,000. And I know that doesn't sound like millions of dollars, but a lot of people can retire off of $300,000. I personally know people that are living a very comfortable retirement, drawing off of a little bit less than this. So this is a good amount, and it only takes $100 a month. And this is 30 years. So ideally, you're a little earlier when you start this, but you can still be in your 30s. And in your 70s, you're going to have something to live off of. You're going to have a decent retirement. So that's the power of compound interest and the power of growth in the market. Basically not doing anything, just doing the two simple steps that I outlined, which is just start, open an account, and find a total stock market tracker like the S&P 500 or SWTSX like I showed. Vanguard has a version of this. Fidelity has a version of this. Any major brokerage will have a same version of these types of index funds, and they are going to perform well for you over time if you are consistent. And finally, what I wanted to talk about is you can use these things to learn the market, learn these products. Investing can be very complicated and overwhelming if you let it be. Things like stocks, options, crypto, mutual funds, ETFs, REITs, which are real estate investment trusts. The list goes on. This can be a very daunting list, and I think this is what stops a lot of people from putting their money into something. But you don't need to worry about any of those. You just need to start. And as you start and as you're going into your account, your brokerage account, for me, that's Schwab, and you're looking at your account, you're going to see some of these other things. You might see how easy it is to buy your favorite stock like Apple, or maybe you wear Crocs all the time and you say, I believe in this company and I want to own them for 20 years. You're going to eventually start to learn those things if you just start and you use that simple index fund just to learn how to use these accounts and start to get comfortable with putting money in and having money in the market over the long course of time. But these challenging products can also be fun, they can be profitable, and they can be very challenging when you are ready. That's the key. You'll want to slowly ease into these things. You'll hear me talk about I'm learning options. Well, options can be incredibly dangerous, and they can also be pretty safe if you do it the right way. But I'm certainly not an expert on any of that. Hopefully I will be in the future, and we'll talk about that on this channel. But today I just wanted to show you how easy it is to get started and how easy it is to make money in the market over the course of many years with consistency. And that's it for today. I intended to keep this video short and to the point about the basics, and then we can get into some of these advanced things as we go. So if you got any value out of this, that's all I care about. I'm just here as a very average dad investor to pass on some things that I've learned over time, hopefully to reach an audience, other average dads or average moms or average sons or daughters, investors, to get you started in your investing journey on the right path. And I'll talk to you guys on Friday in the next video where I share progress to my journey. See you on the next one.